I recently sold my HVAC company, and although that's not what this video is about, I'm going to be talking about why billionaires are buying up HVAC companies. But the reason I'm bringing that up is when I was in the process of selling my business, there was literally articles coming out left and right about how private equity groups and Wall Street are buying out HVAC companies left and right. And in this video, I'm going to talk about why they're buying them up and what this means for you if you're in a position where you're trying to sell your HVAC company or home services business, because this particular video is not just geared towards HVAC companies or plumbing companies. It's really all home services businesses, but we're going to talk specifically about HVAC and some other home service businesses and why billionaires, aka Wall Street and private equity groups, are buying up these blue collar service companies. Now, to give you a little bit of history about HVAC and acquisitions, back in the day, and we'll call it, let's say 20 years ago, so a few decades ago, the multiples that people were paying on these HVAC companies was maybe a 1 or 2x, meaning that when people were selling their HVAC company, they would get a 1x multiple on the earnings. So if you had a $5 million company earning $1 million a year, they would give you a multiple of 1x, meaning that you would get $1 million for your $5 million gross revenue business. However, that same business today could net you $5 million or $10 million or even more for the right buyer, because people are paying higher multiples because there's so much competition from private equity groups that are wanting to buy out HVAC companies and other home service businesses. Now, there's a couple reasons for this. Number one, and if we look at what's actually happening in the marketplace and we look at yields, interest rates, especially right now, are sky high. As of the filming of this video, interest rates on a mortgage are around 7%. On commercial debt, it's even higher, which means that the prospect of buying cash flowing real estate, until we have cap rates that go up to match these new interest rates, we're not really going to see a lot of people investing in the real estate space, especially commercial real estate. And this is why commercial real estate is tanking. This is why office buildings are sitting empty. There's other reasons why office buildings are sitting empty and not selling. But the big point there is that they do not offer the same rates of return that they were years ago when, or not even years ago, just a few years ago, when we had much lower interest rates, and therefore it was easy to cash flow these properties and get a better rate of return on your money. So as a result, Wall Street and investors are looking elsewhere for places to put their money. And this is why they have turned to HVAC companies and home service businesses, because they're one of the untapped markets in terms of the fact that they're not operationalized. They're not mostly centrally owned. So they're still owned. Most HVAC companies or most home service businesses are actually independent mom and pop shops. The actual statistic is something like 75% are mom and pop shops versus being centrally owned by a company that's doing consolidations like a private equity group. So the reason that's important is because they're not competing with each other for businesses that they already own. There's actually a huge supply of businesses that are mostly off market. Most of these businesses are not actually for sale. That's why they are actively seeking people and actively seeking deals that are off market to buy. And one of the things that they've started to learn is that these businesses are very recession resistant. You see, when, regardless of what's happening with the economy, way you heat or cool your home goes down, you're going to spend money to repair that system, or you're going to spend money to replace that system, and you're going to prioritize it other areas that tend to go down in a recession. So when you look at things like kitchen countertops or remodels or things that are excellent businesses, there's huge demand. Those are discretionary purchases that tend to get put on the back burner in times of economic hardship when there is a recession or a downturn. Whereas with HVAC, it's relatively untouched. Now, we will see in a recession, we will see more people opting for system repair versus system replacement, and people will hold on because people will be holding on to cash, and so they won't be wanting to spend it on maybe that expensive system, or they might put it off for a year or two. But what you then see is that manufacturers start to get more competitive in offering 0% financing in conjunction with these offerings in order to help incentivize contractors to offer these systems so that people can afford to purchase the system now versus waiting later, because they're getting the system essentially for free or with no interest financing. And so in an economic downturn, it makes things more affordable. Now, the other reason they love these businesses is because there is so much demand. What they actually plan to do with the business is not just buy it and let it sit, at least not most of the time. What they're trying to actually do is buy the business, operationalize it, improve it, make it more efficient, so that they can then bundle it up and package it up in what's called A roll-up for short, which is essentially just a conglomerate of multiple businesses that are in the same niche, that are all operationalized with central executive management, that allows them to be more efficient as a business. It doesn't mean that the corporate culture is necessarily better, obviously, because there are some results that happen when these businesses get bought or sold. And some private equity groups are better than others about maintaining corporate culture. And so that's why some of them have varying reputations in that space. But what's interesting is that if you look at a $5 million business that I mentioned earlier that might be doing $1 million in net earnings or $1 million EBITDA, if it's getting a 5x multiple on that, so they're selling that business for $5 million, when this private equity group takes that business and then bundles it up with 10 or 20 or 100 other HVAC companies, and so they have now a $50 million business or a $500 million or a $1 billion business in terms of gross revenue from the combined value of the total revenues from all the combined companies. Now, all of those earnings, they get valued at a higher multiple because of the fact that there is less risk when you combine multiple moving parts. Now, you might think there would be more risk because you have more things that can go wrong, but it's actually the opposite. You see, a business of the size that's 5 million or more in revenue tends to fall into a category of it has some level of management or mid-level management. The owner is usually not as involved in the day-to-day operations, although they might still be a manager themselves. The business runs without them. They're not responsible for doing all the installation or all the service work or providing the actual customer service to the customer. They might be putting out the occasional fire. But what happens is these businesses are essentially assets that are running themselves at this particular size. And so as a result, when you combine 100 of them together, now that revenue on paper looks like a $500 million conglomerate of gross revenue. And if each of those businesses is spitting off that same 20% margin, now you have $100 million in EBITDA or earnings that is going to be valued at a much, much higher multiple. So essentially what they're doing is they're taking this arbitrage of combining businesses into one business and then flipping that business off and selling it later as a roll-up. And this roll-up strategy, it's a lot of work. It's not easy. Otherwise, everyone would be doing it. It's very complex. There's a lot of things that can go wrong, and it takes deep pockets. So that's why billionaires, aka Wall Street, and private equity groups that have access to private capital are so interested in these home service companies, is because they can do a very simple roll-up strategy, and over a period of 5 or 10 years, they can create an asset that is very, very valuable. They can do minimal things to really improve efficiency and make the business run better and still end up with a much higher valuation on that total business. And we'll talk about what this means for you if you're a business owner that has an HVAC company or a plumbing company or electrical company or any other home service company and you're looking to sell, because we actually work with business brokers. And if you're interested in being referred to one of our business brokers, there's a link in the description where you can request to connect with one of those brokers, and we can refer you to a broker that's going to be best suited to your specific niche and your specific business. The other interesting thing about HVAC companies in particular, or plumbing businesses, electrical businesses, and other home service companies, is that a lot of these businesses require licensing, and they have a relatively complex structure in the sense of they're a very simple business to duplicate, but there's still a barrier to entry in that in most jurisdictions, in order to get licensed, it takes several years. It can take apprenticing under another licensee. And so there's a lot that goes into becoming a licensed HVAC company or plumbing company. And because of this, that barrier to entry makes it so that, yes, there will always be lots of competition within the market. You are always going to have lots of competitors within the Denver market, for example, which is where I sold my company. There's literally 1,000 registered HVAC contractors. Now, the percentage of those that are actually active in taking a fair amount of market share is relatively low compared to the bigger companies. There's probably 100 players in the space in the Denver metropolitan area that are even doing over 1 million in revenue, and the amount of companies doing over 5 or 10 million in revenue is probably 20 or 30 companies. And the reason this is relevant is because it creates a strategic advantage for these private equity groups on Wall Street that are buying up these companies, and that competitive advantage is that that barrier to entry limits the competition in that space. Because see, the people who are hiring the small one-man show to go and do plumbing work or HVAC work or service their lawn are not in the same market as someone who is hiring a company like mine, because my company was more of a premium brand and it was competing with other premium brands in the space. And we were all pretty competitive in terms of the price and our offerings and what we were able to perform in terms of the equipment that we worked on. We worked on boilers, we worked on heat pumps, we worked on air conditioners, and we would do a variety of other types of systems, especially in the residential space, mostly, at least for our business model. But the bottom line is that that barrier of entry provides them an insulation and also provides an inherent value to the business that when you combine it with multiple other businesses, creates that larger multiple. And so as a result, again, this creates opportunity for you if you happen to be in the market where you're selling your HVAC company or other home services business. So if you found this content helpful, please hit the like button for the algorithm and subscribe to the channel. And if you're curious to know how much I sold my company for and how that actual process went down and how I actually sold my business, I talk about why I sold that business in another video. And so that video is popping up right here. And if you haven't done so already, please hit the like button for the algorithm and consider subscribing to the channel, and we will catch you on the next episode.